Okay, so basically we have three types of entry orders, right? We have a limit order, we have a stop order, and we have market execution. So a limit order is an order to buy at market below the current price or to sell at market above the current price if the order price is reached. This is used when the trader thinks that price action will reverse upon hitting that specified level. So I want to show you a little bit more what a limit order is. So we're only going to focus on the right hand side. Okay, so we're only going to focus on the right hand side, right, of the limit, right? So we have a buy limit and a sell limit. So for a buy limit, an order is placed below price and price then goes up. So think of it like this, right? Price has to move in the wrong direction before it's going to move in the right direction. And the right direction is basically where you want the market to go to hit that take profit and to make that money. So it's really going to move like a boomerang, right? So first, for a buy limit, price is going to go down to a sell. That blue line you see there is your pending order. It's going to activate your pending order, and then it's going to shoot up into that buy to hit your take profit, right? It's going to go down and then bounce back up, right? It's going to go down and bounce back up. Now, in a sell limit, price is going to move up into a buy, which is not what you want, right? That's the wrong direction. Then it's going to activate your pending order, and then it's going to move in the right direction into that sell and drop. So order is placed above price, right? So your order is above where price currently is, and the price is going to go down. So your order is placed at that blue line up above where price currently is. Price is going to go up to activate that order, and then it's going to drop. Once again, right? It's going in the opposite direction that you want it to go to. Once it picks up your order, it's going to go in the right direction, right? It's going to go in the opposite direction before it's going to go in the right direction. That's what's happening with a limit order. Now, in a stop, order, you're going to be buying at market above the current price and then or sell at market below the current price. And this is used when the trader thinks that price action will continue upon reaching that specified level. So what's happening is, once again, we're going to focus now on the left-hand side. We have a buy stop and we have a sell stop. So order is placed above price and price keeps going. So for the buy stop, right, that blue line is your entry, right? That's your pending order for your entry. And so price is coming from below. It's going to go up, activate that pending order, and continue going. So think about it. Price is moving in one solid direction, right? It's just shooting up. Price is coming up, activating that buy entry, right? And then going up to your take profit. It's moving in that one direction. Now for the sell stop, right? Price is placed below, your order is placed below price, and then price is going to keep going. So at the base of this arrow, you have price, right? Where price currently is. Price is starting to move. It's going to activate your pending order at this blue line, and then it's going to continue going down to your take profit. Price is shooting down in one direction, right? It's going straight. So when you're using a stop, you're expecting price to shoot up straight into that buy or shoot straight down into that sell. Price is moving in one direction. When you're using a limit, you're expecting price to change its direction. When you're using a limit order, you're expecting price to change its direction at some point before going in the right direction. So okay, so now let's take a look at a chart and see how this works in the market. We have EUR USD, which is the euro and US dollar. We're on the 1 hour time frame. As you can see, it's highlighted here. And so now we're going to look at what it looks like to have a buy stop versus a buy limit and a sell stop versus a sell limit. So let's say, let's scrunch this up a little. Right. Okay. So let's say, right, we're looking, let's say price is right here, right? So I'm going, price is here, right? This is where price is. We're looking to put in a buy stop we're looking to put a buy stop right here, right? So price is right here. We've analyzed the market and we're looking to place a buy stop right at this area, right? Right at this area. So what's happening? We have price below our order, and then our take profit is going to be above the pending, right? So if you are paying attention to this chart here, you're going to see we have, for the buy stop, we have price placed, we have our order placed above price, sorry. We have order placed above price, and price is going to keep going up. So this base here is price. This is our pending line, and our take profit is up here, right? That's basically exactly what I am showing you. Price is right here. This is our pending order. And this is our take profit, right? Our TP is right here, our take profit. So what's happening? We're going to get that motion that we're looking for. Price is down here. It's going to shoot up, activate this order, and go to our take profit, right? Price is moving in that one direction that I was showing you, right? It just went straight up. So awesome, right? Price went straight up. This is perfect. Activating our buy stop. Even if I put price to be right here, price is moving in solely one direction, right? Perfect. So now let's look at an example, of a sell stop, right? So now we have, let's say this is our entry for the sell. This is our take profit right here. Price is currently right here, right? Price is currently right here. We have our pending order below price, and our take profit is here. So what's happening? We have this one direction of this drop, right? We have price here going to activate our sell stop and is going to continue going down in our take profit, moving in that solid one direction that we discussed, right? Sell stop here. Order is placed below price. Order is placed below price. So can you show me where our order is? This black horizontal line here is our order, right? And it's placed below price. So perfect. Order is placed below price and price keeps going down. That is exactly what I showed you. Now let's look at an example of a limit, right? So we're going to do both of them. So a limit means that we're expecting price to go in one direction, right? We're expecting price to go up into a buy before activating our pending order to then drop down for the sell, right? This is the boomerang we're talking about. So if price starts right here, if price is currently here, and we have this sell limit placed right there, right? This is going to be our sell limit order that's placed. We're expecting price to go up into a short buy to activate the sell limit to then drop down into that sell that we expect. And here is going to be, where we're taking the trade to. So this is the boomerang effect, and this is our TP. So price is going up in the wrong direction to activate our pending order of a sell limit, and then it's going to drop and go in the right direction to hit our TP for the sell. So let's look at the sell limit image here. Order is placed above price, right? That's what we did. And price then goes down. So what happened? We had price here going in the wrong direction to activate our pending order. Then once it activated the order, it's then going to drop into that sell that we expect. Now for the buy limit, order is placed below price, right? Our order is, this is price. Order is placed here, and then price goes up. So we're doing the opposite that we just did with this sell limit. So for instance, right here. Oops. So we have our pending order here. I could have kept that take profit. Our take profit is right here. This now becomes our buy limit. And so we are expecting price to come down. Price is over here. Price is over here. We're expecting price to come down in the wrong direction, right? We're expecting price to come down, activate our pending buy limit order, and then to shoot up into a buy to hit our TP, right? Is moving in the wrong direction before moving into the right direction. It's moving down into a sell. It's moving down into a sell before going into that buy. Moving down into a sell to activate the order, and then moving into a buy, right? Like a boomerang. When you take a boomerang, you throw it at the tree, you expect it to go towards the tree and then come right back over your head, right? I see the limit as a boomerang effect. And for a stop, we're expecting it to go straight into the direction we want it to go. We want it to just go straight into the direction we want it to go non-stop, right? So that is basically how to tell the difference between the two. Now, when it comes to using a limit or a stop order, right, it's really important to know when you want to use one or the other, because you can decide okay, so that's an example of a sell stop. This is an example of a buy limit, right? But I should actually switch it around so I can give you a better example of why you want to use one over the other. Bear with me, guys. So the circle with the arrow is basically where price currently is, right? And if we're saying where is price currently, when you looking exactly where it is, it's where the circle is. And if you're saying the black horizontal line, that is our order type. So now on the screen, we have an example of a buy stop, and we have example of a buy limit. Perfect, right? So now we can see that they're doing two different functions, right? The buy stop is going in that one direction straight. The buy limit is going down before going up. So knowing the difference between the two can help you in terms of when to place a certain order. right? So if you had placed a buy stop instead of a buy limit here, your trade would not have activated because in the motion that the market is going, right? You would have been at the point of time when you're entering this trade, the price is currently going to be above or below where you actually want to enter the market. Hence why with the buy stop, price is going to be below that buy entry that you are looking to enter the market for. And with the buy limit, price is going to be above that buy entry where you're looking to enter the market for. So sometimes when you're putting in your entry price and it's not going in, but the coordinates are right, is because price is not in a certain position compared to your order type, right? You might be putting buy stop, but price is currently above and not below, and that's why your order is not going through. So you have to wait for that certain setup to happen in order to place it, or you have to change your order type. However, if you put the wrong order type, right? Sometimes if you put a buy limit but the market is moving in a buy stop, your order might not get activated. Now, a lot of the times, I've learned with a number of people that sometimes putting in a limit, you might get activated a little bit earlier than you would like to be in the market. So, if you're still confused about using a stop versus a limit order and when to use it, always position yourself for a stop order. Why? Simply because of this. If you're entering the market and you want it to go in a buy, right, you want to make sure the market is actually moving in a buy so that, it's going towards your take profit and it's ready to actually make that movement. So your chances of putting order types that are a stop and making sure that you're entering the market in these certain areas that are going to allow you to kind of make sure that the market really is moving in this direction is going to increase your chances of really winning. And so what I've done now is actually push people towards using stop orders more than limit. If you understand how to use a limit order, then go ahead and do it. I still use it from time to time. But for those people who are still confused, and if you're still confused after this explanation of why you're using one versus the other, and that's because of in relation to where price currently is and in relation to where you plan to enter the trade, that's simply what's happening. And it also means that you're expecting the market to do one of two things before you enter. You're expecting market to come up straight into your order type, right? Your pending order, sorry. You're expecting the market to come to your pending order to activate and continue to go towards your take profit, or you're expecting the market to reverse its direction before actually hitting your TP, right? You're expecting it to do an extra movement before going towards that direction that you want it to go. So if it's easier and safer for you, just stick to buy stops and sell stop. There's nothing wrong. You will still be able to catch pips and profit. So I hope this helped. Let me know what you think. Let me know if you have questions. Do you use both or do you just use one order type? Everyone has different types of trading styles, so it is okay if you only use certain order types. For example, some people use just market execution, and market execution means that you're entering the market where price currently is, just about. So hope that helped. Thank you for watching. Make sure to like, comment, and subscribe.